Welcome back to the webinar. This is part 4 of our first time homebuyer webinar, and we are talking about homeowner benefits and responsibilities. I am Andika Duncan. I am the broker of Showstopper Realty. Let's get started. Please like this video, subscribe to my channel, and share the video with others. Thank you so much. So what are we going to discuss today? Benefits of home ownership, tax benefits, responsibilities of home ownership, refinancing and home equity, preventing foreclosure, and home maintenance and improvements. In this series, part 1 was mortgage application, part 2 was buyer representation and home search, part 3 is making an offer and the escrow process, and part 4, which is this one, is the responsibilities of a new homeowner. This presentation provides tips on how to maintain and protect your home investment. You will learn invaluable tips on the benefits and responsibilities of being a homeowner, such as property maintenance and repairs, taxes and insurance needs, managing money, and avoiding financial problems. Tax benefits. The two big areas where homeownership can save a lot of money are interest expense. Homeowners can deduct interest expenses on up to $750,000 of mortgage debt from their income taxes, though when they itemize these deductions, they forego the standard deduction of $12,000 for individuals or married couples filing individually, $18,000 for head of household, and $24,000 for married filing jointly. Capital appreciation. While the home increases in value during ownership, these gains are not taxed at the federal level, and then homeowners can exclude up to $250,000 in home appreciation when figuring their capital gains. Homestead exemption. Homeowners can take advantage of what's called a homestead exemption. Basically, a homestead exemption allows a homeowner to protect the value of her principal residence from creditors and property taxes. A homestead exemption also protects a surviving spouse when the other homeowner's spouse dies. State homestead exemptions often have 4 features, including the well-known property tax exemption on a portion of a home's assessed value. You should file your regular residential homestead exemption application between January 1st and April 30th. If your application is postmarked by the last day of April, this will allow the district time to process it before your tax statement comes out in the fall. You only have to do it once, by the way, on the first year when you move in and you live in the home on January 1st. Financial responsibility. Keeping good records. Home ownership comes with a lot of paperwork. To get the tax benefits, you'll need good records of your housing-related expenses. If you ever experience damage to your home caused by an emergency or disaster, such as fire, you'll need your insurance policy along with copies of purchase receipts and photographs. Or if your new refrigerator breaks, you'll need to have easy access to your warranty. Set up a system for filing your homeownership records as soon as possible. Buy a fireproof filing cabinet or box, or rent a safety deposit box at your local bank to store household records and legal documents. Prepay your mortgage. By prepaying your mortgage, you can save money in interest paid over the life of your mortgage by including some extra money with your regular mortgage payments, or by setting up an automatic biweekly payment schedule. In fact, by prepaying, it will reduce your loan term and lower the total interest owed over the life of the loan. Home insurance. Be sure to maintain adequate insurance coverage. Ideally, you want to ensure that you have enough insurance to cover 100% of the cost to rebuild your home at current construction cost, but not including the cost of the land. Spending and savings plan. Fixed expenses are costs or payments which generally do not vary from month to month. For example, your car payment will remain the same each month. Variable expenses are costs or payments which may vary from month to month. For example, your groceries could vary each month. Needs versus wants. Needs are things in life which are required for basic survival, like shelter, food, and clothing. Wants are things in life which are not essential for survival but are desired for comfort, convenience, or status. You should personally balance your needs and wants so that you can successfully establish a savings plan and good spending and savings principles. If your income is greater than your expenses, you are able to work on the savings plan. It's important that you create your savings plan because savings and investments can help you to become financially secure and to meet your goals and priorities. To establish a savings plan, plan to save every month, even if it's only $30 a month. Figure out which expenses you can cut down in order to save money. Owning a home is a huge success, but it is also a big responsibility. It comes with bills, repairs, and new expenses, and you must learn to allocate your money wisely. Refinancing. Refinancing is when you take out a new mortgage to pay off your current mortgage. At some point, you may think about changing your mortgage terms by refinancing because mortgage rates have gone down or your financial situation has changed. Choosing to refinance is a personal decision that should be based on your financial situation, the terms of your existing loan, the new loan being considered, and how much equity you have in your home. Before starting the refinancing process, you should understand the following. Refinancing your mortgage can have significant costs. Refinancing may extend your repayment term. If you receive special financial assistance from your local government or a nonprofit organization to purchase your home, you may have to repay a portion of these funds if you refinance your home. If your original mortgage includes a prepayment penalty, you may incur a penalty for paying off your mortgage through a refinance. You should take some time to evaluate your refinance options. Here are some good reasons to consider refinancing. Save money on your interest rate. If interest rates drop lower than what you have on your current mortgage, refinancing at a lower rate could reduce your monthly payments and the total amount of interest that you pay over the life of the loan. Lower your monthly payment. If you would like to reduce your monthly mortgage payment, you could either extend the term of your loan or switch to a loan product with a lower interest rate. Convert one type of mortgage to another. If your financial situation has changed and the mortgage type you have is no longer the right fit for you, you could refinance to obtain a different loan type. Build your equity faster. If your financial situation has improved since you bought your home, you may want to get a mortgage with a shorter term. This will help you pay less in total interest charges and own your home sooner. On the other hand, your monthly payments will be higher. Take cash out. If you need some extra cash, you could get a cash out refinance loan. With this type of loan, you turn some of your home equity into cash by getting a larger loan, often with a higher interest rate than the loan that is being paid off. When you refinance, you will want to find the right lender. Before you select the right lender and loan product for you, you'll need to understand what different lenders can offer to you. So start with your current lender and then contact at least two other lenders so you can compare the loan options you have received. Home equity. Home equity is the difference between what your home is worth, the current market value, and the total amount you owe on your home, which is your outstanding loan balance. You can build equity by paying down your loan balance or having your home's value increase. After becoming a homeowner, you will receive many offers by phone and mail for home equity loans and home equity lines of credit. When you borrow against your home equity, you get a loan or line of credit that is in addition to your existing mortgage. There are many reasons for borrowing against your equity. Maybe you want to make some home improvements which may increase the value of your home. According to Money Magazine, kitchen and bathroom remodeling will bring the highest return for your investment. Choosing the right loan product for you depends on what you plan to do with the extra money, how much you need, when you need it, and how quickly you plan to repay. There are many ways you can borrow against your home equity. But no matter which loan you get, be sure to exercise caution when borrowing against your home equity. Home equity loans are often structured as 10 or 15-year loans, and that's a long time to pay back. Preventing foreclosure. Foreclosure is the legal process that allows a lender to take back ownership of the mortgage property and sell it when a loan is in default. The worst fear of many homeowners is falling into deep financial trouble and losing their home. Many homeowners in financial trouble avoid the issue instead of asking for help from friends, relatives, counselors, lenders, and others. If you do not address your financial troubles immediately, you may face foreclosure. No homeowner wants to face foreclosure, so it's extremely important to learn how to avoid foreclosure. Here are some common causes for foreclosure: job loss or income loss, health crisis, taxes, utilities, or property insurance problems, high cost auto loans or consumer loans, disability, overspending, or death in the family. You may want to think about refinancing. The new mortgage could pay off the old loan along with any late fees and attorney fees. If catching up on payments is not possible, the lender might agree to put the foreclosure on hold to give you some time to attempt to sell your home. While this approach may not be ideal, it gives you an opportunity to sell the property and perhaps walk away with some of your equity. In some cases, the lender may agree to the voluntary transfer of the home title back to them in exchange for cancellation of your mortgage debt. This approach, called deed in lieu, could have a negative impact on your credit record, although not as much as a foreclosure. Maintenance. Just like regular oil changes for your car keep your engine happy and healthy, keeping up with regular home maintenance tasks will help you from future headaches and wasted money. It can be intimidating to think about these various tasks, especially if you're a new homeowner. It's a long list, and there's no denying that. The good news is that you can do the majority of it on your own without much experience. Google is your best friend, and if you really get stuck, call your local handyman to help you out. In order to maximize your efficiency and actually get all of these tasks done, you might want to create a home maintenance calendar for yourself. You can download the home maintenance checklist from our website at showstopperrealty.com/docs/maintenance checklist1.pdf. Not every expert agrees as to which task needs to be done in which season. So this isn't a black and white list necessarily. Do what works for you and your schedule. And as long as all these things get accomplished, your home will be happy for years and years to come. You can also hire a property inspector occasionally to give you a clear picture of the condition of your home. Home improvements. You have just bought a house at probably very close to its market value. Improvements can be tricky. If you are adding functional improvements, you will probably recover your investment down the road. For example, you updating your bathrooms. However, if you are adding design elements, keep in mind that your taste may be yours alone. For example, you add marble floors all over the house where laminate is the norm in the neighborhood. If you are over improving the home, you may not win any extra equity. It is for your personal enjoyment in the first place. Contact your real estate professional for advice before you invest a lot of money into your home and have a good understanding of what creates extra value and what may not. That way you won't be surprised when you turn around and want to sell the home. Well, this concludes the webinar for first-time home buyers. I hope that we covered many of the questions that you should have. You can always leave a comment below, email us or contact us on our website. And please subscribe to this channel, like this video, and share it with others. Thank you.